Right, let's jump right in. We're going to deconstruct something that, let's be honest, can feel super dense, a corporate investor presentation. We're going to use a real one from a firm called Systematix, but the goal here is to build a kind of roadmap, a decoder that you can use on any of these documents you come across.
Yeah, you're definitely not alone. It often feels like they're packed with jargon and legalese and just endless data tables that can make your head spin. So, what we're going to do in this explainer is translate that language into something that actually makes sense and show you exactly where to look to find the real story.
You know, pretty much every single one of these presentations kicks off with the part that most people just skip, the disclaimer. But that's a huge mistake. This is where the company puts on its legal suit of armor, and understanding that tells you a whole lot about the rules of the game. Okay, so the first big piece of jargon you'll always see is the forward-looking statement. The best way to think about this is it's the corporate version of saying, hey, don't hold me to this, but here's what we think is going to happen. They're making predictions based on what they know right now, but they are making it crystal clear these are not promises. And just look at the wording they use. The company itself is telling you that a whole bunch of factors could make their actual results look totally different from their predictions. This isn't buried in some footnote. They are legally required to manage expectations, and this is exactly how they do it. So you might be wondering, how do they get away with making these big predictions that might not even come true? Well, that's where something called the safe harbor provision comes in. It's basically a legal shield. It protects the company from getting sued if their forecasts are wrong, as long as they warned everybody up front that, hey, these are just educated guesses. The takeaway? It's simple. Always, always read the warning label. Okay, so once you get past all the legal stuff, what's next? You'll almost always find a message from the leadership, in this case, the managing director. Now, this is the company's curated story. This is the big picture narrative they want you to walk away with. It's their elevator pitch. This quote right here, this is the heart of their message. Systematix isn't just saying, we offer financial services. No, they're framing their whole identity around two big ideas. One, they have a huge range of offerings. And two, and this is the important part, they are all about building lasting partnerships with their clients. That's their brand story. So, if you boil that down, you really see four key things they're hammering home. They're talking up their long history, which implies stability. They're listing their core values. They're pointing out their wide reach. And they keep coming back to that central idea of relationships. And this isn't just fluffy marketing talk. It's a strategic way of telling investors what this company is really about, beyond just the numbers on a spreadsheet. All right, we've heard the story they want to tell. But now it's time for the proof, right? This is where we get into the numbers. And I know data can look intimidating, but our goal is to find the story that's hiding inside the figures. This section is all about performance. Let's start with just one clean number to get our bearings. In the first quarter of their fiscal year, Systematix pulled in just over 39 crore in revenue. This number is our anchor. It gives us a quick snapshot of how they've been doing lately in one easy-to-digest figure. But a single number, it doesn't really tell you much. It's the comparison that tells the story. And wow, the year-over-year change here is just dramatic. Look at their profit after tax. They went from 1.74 crores in Q1 of last year to 10.46 crores in the same quarter this year. You don't need to be a financial wizard to see that is a massive jump. Let's just put a percentage on that jump. 501%. A 501% increase. I mean, that is just a staggering level of growth. It's the kind of headline number that really makes investors sit up and pay attention. It's a huge signal that something is going very, very right. Now let's zoom out. Was that quarter just a fluke? Let's look at the bigger picture. Over the last 4 years, their revenue has grown at a compound annual growth rate, or CAGR, of 61%. That tells us this recent success isn't just a one-off. It's part of a consistent, powerful pattern of growth over the long term. And if you thought the revenue was impressive, the profit story is even more incredible. We're talking a 98% compound annual growth rate over 4 years.
This is a huge indicator of momentum. It means they're not just making more money, their ability to turn revenue into profit is actually accelerating.
And finally, let's talk about efficiency. Return on equity, or ROE, is a fancy way of asking, how good is this company at using its investors' money to make more money? And jumping from 2% to 15%, that's a massive leap. It shows the business is becoming a much more powerful profit-generating machine. So the numbers look fantastic, but what does Systematix actually do to make all this money? That's the next logical question, right? So let's break down their business into simple, understandable parts. At its core, the company really operates in 4 big buckets. They help other companies with things like mergers and acquisitions, that's investment banking. They help them raise money by selling shares on the stock market, that's equity capital markets. They handle trading for big institutions and regular people, that's brokerage. And they manage money for wealthy clients, that's wealth and asset management. But what does all that corporate speak mean in the real world? Well, here's a perfect example from their Q1 highlights. Across all those different services, they helped their clients raise almost 950 crore in capital in just 3 months. Now, that takes all those abstract services and turns them into a tangible, really impressive result. And you can see right here who they're working for. Their client list is incredibly diverse. They're serving everyone from massive global investment funds all the way down to everyday retail investors. And that's smart. It helps spread their risk and gives them a ton of different ways to grow.
So look, we've just spent this time breaking down the story of one company. But the real goal here was to give you a set of tools. What we've really done is learn a repeatable framework for making sense of any corporate presentation that lands in front of you.
So here it is, your new game plan. First, always start with the fine print that tells you the rules. Then, read the message from the top to understand their vision. After that, you dig into the numbers to find the proof. And finally, you make sure you get the core business, the how they actually make money.
Think about what just happened. You've basically learned how to take this thing that feels like a one-way corporate monologue and turn it into a two-way conversation. You now know which questions to ask, and just as importantly, you know where to look for the answers. You can actually engage with this stuff now.
And that leaves us with one final question. We've walked through all the pieces of this presentation, the legal warnings, the grand vision, the incredible growth, the business model. Now that you have the tools to decode it all, what story does it ultimately tell you? That right there is the real power of knowing how to read this stuff.